Alright, so I've got a couple of interesting things about the silver market. Actually, it looks like specifically silver and gold, but actually, one article is mostly on gold, one's on silver, but this is interesting together one way or the other. The SRS Rocco report. According to the USGS most recent report, the U.S. silver market experienced two significant developments in August. From the data published in the USGS August Silver Mineral Industry Survey, U.S. silver production declined significantly, while silver imports surged to near record highs. First, U.S. silver production in August is down a stunning 14% compared to the same month last year and down 10% versus the previous month. And the previous month was down. This is certainly a decline compared to the trend earlier in the year, where the average U.S. silver mine supply was approximately 95 metric tons a month. What makes this quite surprising is that the price of silver hit a high of $20.70 in August, nearly $5 higher than during January to March. So why is the U.S. silver production declining so much as the price continued higher? I called up the USGS silver specialists and left a message on their answering service as to the details why silver production in the U.S. declined so much in August. If I receive a reply, I will update the post. Secondly, the U.S. silver imports hit a near record high of 581 metric tons in August versus 502 metric tons in July and 464 metric tons in June. This large jump in U.S. silver imports is interesting as demand for the iShares Silver ETF was basically flat in August. Even though the SLV ETF silver inventory surged during the first half of the year, it was relatively flat in July and August. What I found also quite interesting is that the U.S. imported 55 metric tons of silver from Poland in August, which was half of their total monthly supply, mine supply. Poland produces about 105 metric tons of silver a month. Normally, Poland exports no more than 10 to 20 metric tons of silver a month to the United States. For whatever reason, U.S. silver imports surged as the price hit a record high of $20.70 in August. As I mentioned, this silver did not make its way into the iShares Silver SLV ETF as their inventories remained flat. So where did it go? Well, according to the information from the COMEX, total inventories on the exchange increased from 153 million ounces at the beginning of August to 163 million ounces by the end of the month. Thus, the COMEX silver inventories increased 10 million ounces or 311 metric tons in August. Thus, some of the nearly 80 metric tons imported by the United States in August made its way into the COMEX silver inventories. Of course, that is if the COMEX holds all of the silver it states in its inventories, or if each silver bar doesn't have several owners. And as you know, they absolutely do. Regardless, to see such a large decline in U.S. silver production in August was quite surprising. Furthermore, the Silver Institute just put out their 2016 interim silver report, which they state that world silver production is forecast to decline in 2016. So we have record-breaking silver selling, bullion sales, and silver in general, against declining amounts being able to be purchased. So the other thing I want to read you, silverdoctors.com, fund manager Dave Kranzler warns something really ugly is coming. Physical gold buying soars in Asia. That's interesting. So is Bitcoin. That's my comment. The price of gold is being attacked right now in a manner that is quite reminiscent of the way it was attacked in the summer of 2008, right before the global financial markets collapsed, led by the fall of Lehman. Something really ugly is coming toward the global economic and financial system. In Vietnam, the premium paid by the public has just soared over $90 over the the spot price, world gold price. The spread has been wider over the last 15 years, but not much, and only during times when there's been high backwardation between the physical delivery bullion markets in the East versus the fraudulent paper markets in London and New York City. Gold was pushing $1,230 an ounce overnight, as the methodological takedown of gold and silver in the New York City and London paper markets has triggered an avalanche of demand for physical gold in the Eastern Hemisphere. Last night, ex-duty import premiums in India were $14 over spot. In Shanghai, the premium to world gold was $9.76. Delivery volume into the Shanghai Gold Exchange rocketed to an extraordinary 86.55 tons. It was 35.9 tons on Wednesday. The open interest on the Shanghai Gold Exchange was 807 tons. To one observer's recollection, John Brimlow's Gold Jottings, this is the first time the open interest has been over 800 tons. In Vietnam, the premium paid by the public was $90 over world gold price. The spread has been wider over the last 15 years, but not much, and only during times when there's been backwardation between the physical delivery bullion markets in the East versus the fraudulent paper gold markets in London and New York City. To reinforce this nebulous idea of gold flowing from west to east, an unusually high amount of gold was shipped out of the COMEX kilobar vaults yesterday. 320,434 ounces left the COMEX. Over 12,000 kilobars have left JP Morgan's vault, according account in the last 2 days. This is being attributed as evidence of Asia's ferocious demand right now, as New York and London, when those two conduits actually clear real metal, trade 400-ounce LBM grade bars, whereas Asia prefers kilobars. The price of gold is being attacked right now in a manner that is quite reminiscent of the way it was attacked in the summer of 2008, right before the global financial markets collapse led by the fall of Lehman Brothers. Something really ugly is coming toward the global economic and financial system. The dollar index soared from 72 to 86 between June 2008 and October 2008, while gold and silver was systematically taken a lot lower. We know how that played. And strangely enough, that was the year, early on, 2008, when Jason Ford got crushed by the likes of JP Morgan and the club with his $20 or $21 silver futures contract, mini contract I was playing, didn't know any better. Went down to $17 with no buyers all the way down. My stops were triggered. Didn't matter. You got stopped out at $17. We liquidated your account, and now we're calling you for a margin call because you owe us some money. What? What about my $3,500? It's gone. Oh. You need to give us like $500 more. Oh. Okay. That's the day I started getting into the financial side of things and researching. How can this happen? This doesn't make any sense. What the hell just happened? And here I am today telling you about it every single day. Similarly, the dollar has gone parabolic in the last week without any visible news or events that would have triggered this move. To be sure, if Trump implements his borrow and spend program for infrastructure projects, the Fed will have to print a lot of money to monetize the avalanche of Treasury debt issuance, given that the rest of the world is now dumping their treasuries. Both of those factors should be dollar bearish and gold bullish. In good times, that's how this will play out. In the latest episode of The Shadow of Truth, we discussed the extraordinary backwardation that has developed in the price of gold between the West and East, We also discussed the evidence of the ongoing collapse in the U.S. economy. I'm going to link this article from Silver Doctors as well as the SRS Rocco Report article if you want to check those out. They will be in the description box below. Again, when I see this stuff happening, it's not making any news. Mainstream media's not even talking about it. As a matter of fact, they're telling you to sell your gold. You do the opposite. That's the bottom line. What they say you do the opposite. Oh, Trump's not going to win. Trump's not going to win. Hillary's going to win. Hillary's going to win. Hit Trump won. Brexit. Yeah, they'll never leave. They'll never. London's not leaving. They're not going anywhere. Britain, nope, not happening. Oh, Brexit happened. Right? You do the opposite of what the club tells you to do with their mainstream media minions. Take care.